Hello again. Welcome to another episode of the Uranium Market Minute. Today is Friday, February 4th, and this is episode number 74. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. As always, before we get into it, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. All right, another exciting day in the world of uranium. It's looking like URA is closing out their rebalance duties today. There might be a little bit of cleanup to do on Monday, but we believe that most of their buying and selling has been done. It's looking like SPUT will end up with somewhere around a 5% allocation in URA. We expected it to be a little bit higher, but hey, we'll take it. A few weeks ago, we did not even expect SPUT to be included in URA. So happy to see it. Honestly, all things considered, the equities held up pretty well over the last couple of weeks with this rebalance. I think it did help that URA ditched BHP. They sold out of Greenland Minerals, and the allocation to SPUT was smaller than we were expecting. So all in all, the selling was less overall pressure on the market, though we do still have half an hour left of trading today. And then maybe, like I said, a little bit of final details in their buying and selling might roll over into Monday. But for the most part, the damage and or the positive in terms of SPUT buying, as well as buying a number of other holdings. They added 7 other smaller caps, but most of the buying that they had to do went into SPUT. But either way, much of that chop that we were expecting should be over. Does that mean we're going straight up here to the moon? Of course not. But I'll get into some of that in the mailbag section. Before we do, I'm just going to run through the daily scoreboard here a little bit. SPUT has been raising a little bit of money lately, and they've been back around that slight premium to NAV. The spot price of uranium sitting at $43 a pound, up slightly from yesterday. That month-end smash obviously is over now that we're a few days into the month of February. And if we see any significant pressure in the spot market coming from SPUT or anyone else at this point throughout the month, we should see a firming up and perhaps some accretive nature to that spot price. They did raise 11.1 million. SPUT did yesterday in new capital, did not purchase any uranium. They are now sitting on 56.7 million in cash. So that treasury is slowly grinding upward with these smaller raises the past few days. So year to date, they purchased 2.8 million pounds, 156 million in new capital year to date for SPUT. They did close at a slight discount to NAV yesterday. However, the stock has traded up today during the market hours of trading, and they did breach that 1% premium to NAV at some point today. In fact, they might still be. So likely they were raising some more cash today. It remains to be seen if they did any purchasing. They now hold 44.1 million total pounds of uranium in the trust. They've raised over 1.1 billion. And everybody obviously is waiting with bated breath for two things. One, the takeover of URNM by SPUT. The shareholder vote for that is happening in a couple of weeks. And we will see, we expect that to be overwhelmingly approved. And we will have to see what happens in terms of Sprott's marketing of this new vehicle, or of this same vehicle under their new branding. It will be the Sprott Uranium Miners ETF. The ticker will remain the same as URNM, and that should happen late February. So early trading in March under that new name is coming soon. Also, of course, people are waiting for the likely upgrading of Sprott to the NYSE listing, to SPUT, excuse me. There's definitely a lot of chatter going on out there in terms of whether or not it will happen. We believe that it will. Of course, it's no guarantee at this point, and we've already seen what they've been able to do on the TSX. So if that is rejected, then Sprott will take its marketing prowess and simply do what they've already done and go into, recommend the TSX, U.U, U.UN. Of course, the liquidity is far greater on the NYSE. So that is obviously a positive if they do get that. Now, they have 3 other physical trusts listed on the NYSE. They have done this before. They have gold trust, they have a silver trust, they have a platinum palladium trust, all physical, with over, I believe it's about 13 billion in AUM for those 3 trusts. And I think they're north of 15 billion for all of their trusts, including SPUT. They know what they're doing in terms of getting this listing. And I do believe that they would not have spent the effort of multiple years, 3+ years, for CEO John Ciampaglia to go after Uranium Participation Corp without the high likelihood that they would be successful in getting that listing. Either way, that remains to be seen. It is something that we and the rest of the market is hoping for and waiting for in some senses, in terms of seeing funds flow come back into the space, because it's unlikely that we'll see some moonshot moves like we did August to September between now and then. This is the review period for the SEC. There will be a public comment period. We don't want them rocking the boat, and they are smart enough to know this as well. So other than that, we are likely to see a continuing firming up of the spot market. What I mean by that is when we see smaller volumes in terms of end purchasing in the spot market and the price stays stable, that's a positive. Now, January was a very high volume month for the spot market, but almost all of that was churn. Those are pounds being traded back and forth, not pounds being purchased by end users. So when I say traded back and forth, that is being sold by a producer to a trader, by a trader to another trader. These are pounds, a trader essentially being intermediary. Those are then pounds held by a trader that would be sold back into the spot market, will be sold in a carry trade to a utility, etc. So a lot of the volume in January came with that type of action, not end user purchasing. So utilities buying in the spot market. Of course, there's always a little bit of that, but largely the utilities are not entering the spot market now. They are short-term, relatively covered in terms of their inventories. There is growing interest in the long term, which we are hearing about from multiple entities, and we should hear about more from Cameco next Wednesday during their Q4 2021 conference call, which we will be tuning into, of course, and you really should be as well. You can get that scheduling on their website. I don't recall. Usually it's at 5:30 a.m. Pacific time. That's my time zone, so that's why I know. And it goes for an hour right before the market opens. So it's the hour before the market opens on this coming Wednesday, which is the 9th, I believe. And that's always a big event for the uranium market. So everybody that's involved in investing in uranium listens to this, because Cameco is the big player in that quarterly conference call. There's always some breadcrumbs to be picked up, and they usually give some details on the term contracting market that they are seeing out there. And that is such a vague and opaque market it's very difficult for the average investor, the average, retail investor, to get detailed analysis of what the heck is going on in the term market. Most of these term contracts are done with NDAs, and the details of these contracts rarely ever leak out. So anytime Cameco gives us some information, it's always appreciated. I did mention the other day that there's a lot of speculation about McArthur River. We do fully expect them to announce that restart this year at some point. Will it be this coming conference call? That remains to be seen. Of course, we think that the market is likely to misinterpret that. That will be a very positive sign, as they have reiterated for years since it's been on care and maintenance. This mine is not coming back online until they have a home for those future pounds. So looking forward to that conference call on Wednesday. To finish out the scoreboard here, looking at the sector equity ETFs, URA and URNM both reported no change in outstanding shares. Again, we're sitting at or very near all-time highs in outstanding shares during this big pullback. And to reiterate, we believe that is at least a small amount of smart money positioning, while retail has been selling down, retail and institutions selling down individual holdings while the ETFs rise in their outstanding share count. Very, very interesting stuff. Trading action yesterday was pretty nasty out there. We believe much of that was coming from not only some broad market influence, but also from URA's rebalance. They did a fair amount of selling yesterday. That seems to be coming to a close at this point. Today is looking mostly green across the sector, which is nice to see. So on that note, let's look at the charts. URA up nicely today, 3.16% with about 30 minutes left in the day. Trading hovering above that rising trend line that bounced off of the August lows of last year. This was previous resistance for multiple months in 2020, became support early 2021, and again in August became support barely for the past couple of weeks, and we're hovering right above that, which is nice to see. 50-day, 20-day still doing a skydive. 200 days starting to finally tick up barely after flattening for a couple of weeks. Overall, looking like it's hanging on pretty well here. Nothing huge in terms of volume. Looks like roughly about daily average trading volume, maybe slightly above here. Obviously not looking like institutions piling in here. Why? Well, I think we are still in that consolidating, accumulation mode here. We have multiple months before we hear more about SPUT's NYSE listing. We have the Cameco conference call, and that's something that institutions will also pay attention to. And we also have still sort of a jittery broad market, let's say. Either way, I'm liking what I'm seeing here in this chart, at least in the short term. I would like to see it continue to chop sideways, if not slightly up, and remain above that trend line. If we do see another flush down, I fully expect it to lose this trend line and go back down and towards this previous support line. At this point, obviously, these trend lines are just kind of guidelines. You can draw trend lines in any way that meets your bias. It's not what I'm doing here. So obviously, if it fell down here, I would like to see it hold here. I would be an incredibly strong buyer if we did get another flush down, to the extent that I had the cash available to do so. Doesn't mean it's going to stop at that line, but that would be a clear sign to me, considering everything that is on the table fundamentally and where these stocks are trading now. Either way, the valuations across the sector are looking very, very attractive relative to the fundamentals. Sprott Physical Uranium Trust up 1.76%. At some point in the day, they were at that 1% premium to NAV. Did they take advantage of it? I don't know. Well, that'll remain to be seen. The volumes are pretty low, so likely they did not raise much, if at all, as it sold down a bit from those intraday highs. Looking at Cameco, the stock is up almost 4% today, holding a similar type pattern as URA, chopping around a bit for the most part, hanging in their lower volumes. MACD trying to turn back up with a bullish cross here. RSI finally coming up off the bottoms, but still, I don't think we're totally out of the woods here. We'll have to see how these stocks trade after the conference call and in the coming weeks. Ideally, we would continue to chop sideways, find some kind of bottom, either that or make another flush lower happen quickly, rip the band-aid off fast, and start some kind of recovery that's meaningful here. All right, so instead of answering a question in the mailbag today, I did have a couple of them come in, but I'm going to save them for next week as they're not all that urgent. I just wanted to mention that there's a comment that I see across YouTube, oftentimes in Twitter, especially when sentiment is low, that says something like this: Justin, you're still too positive. That must mean there's more to go on the downside. All right, so when you have markets that have, especially resource markets, that have strong fundamentals, especially for the mid and the long term, basically the movements that happen until those fundamentals physically move the price of the commodity are usually dictated often by sentiment. Okay, so what you have is at the intracycle bottoms, you have retail in a panic followed by institutions buying. And at the intracycle tops, you have retail euphoric followed by institutions trimming. This will always happen. This is always that way. Okay. So this comment that I get often, things are too positive. Justin, you're too positive. We're not going to be, we're not at the bottom yet because of your positivity. Well, I'm generally an optimist. I also generally know what I'm talking about when it comes to the uranium market. I don't really put myself in that typical retail camp because I know what I've put in terms of hours, in terms of thousands of hours studying this market for 5+ years at this point. And so I wouldn't say that my own sentiment is really much of an indicator. Now, you might be able to read between the lines on days or weeks that are very red, and my emotional state might come across in these videos, and vice versa, right? So, but either way, I'm very, very positive on this market over the intermediate and long term because of that research that I've done. And so when I see periods like we've had over the past couple of months, while this has not been fun to watch the paper value of my own personal account fall by about 35–40%, that has not been fun. It's not really a concern of mine because I have this viewpoint that is long term. Also because we've made some intelligent trades and have defensive positions, not only in physical, but also in cash. And we've created that via these trades that we've done and that we've recommended to our members. So we have a sufficient defensive position here between cash and physical, and that feels fine to me. While the rest of the portfolio can continue to trickle down or chop around sideways, I don't really care. These are companies that I own that that I feel very confident in, that we've recommended to our members, and our members have been very, very strong through this whole pullback, taking our advice and our recommendations. So with all of that said, when we see pullbacks like this in a market where conviction is extremely high for the mid and long term, that definitely helps for to weather that short-term volatility. Okay, so basically, to add to this, there's an expression. Knowledgeable players are watching this sector. There's an expression, right, that especially in resource markets, slowly then all at once. And that's often what happens in these markets that are slow to turn, especially very inefficient markets like uranium. When you have other commodities markets, let's say oil and gas, for example, where you have price overshoots, which you always have in commodities, right? You have longer periods of prices that are below the cost of production. It washes out a number of companies disappear, companies go bankrupt. There's an oversupply that came from the previous highs in price. Then that swings to the other side and it always overshoots. The price goes higher. It incentivizes new production to come online. Then that new production that comes online lowers the price. Uranium is unique in that you simply cannot have supply response from production happen fast enough to reverse prices in the short order. And we're still in the early stages of this price rise, okay? We're now, I would say that the bull market for the equities started just over a year ago. And this is going to be a multi-year run. And judging by this pullback of 40+% here since November highs, we're barely off, we're most of these equities are up, 50%, 100% maybe from those December 2020 levels. And some of the juniors obviously have outperformed that, and some have performed even less than that. So in terms of the length of this bull market, we're still in the early stages. And so this slowly then all at once statement really is going to describe this market very well going forward. And what is the slowly aspect right now? The slowly aspect is this grind for retail investors and for institutional investors who tend to be more patient and have longer term views. But this grind where we'll have these gut-wrenching pullbacks, and when you zoom out, the trend is obviously up, but we're going to chop around for periods of time. You have this grind of working through supply. Okay, we're now hearing basically that the above ground mobile inventory in the spot market is essentially non-existent. And when I say non-existent, it doesn't mean there is zero out there. That just means the tens of millions of pounds sitting in a can available for sale that's just sitting idle, not held by someone that's an active seller, available in the spot market, has been worked down to very, very low levels. Okay, this is the supply that was vast even a few years ago, that came from the oversupply of the previous decade. It took a long time to work through that, longer than anyone expected. Carry trades helped work through a lot of that supply. Okay, traders buying in the spot market, making midterm contract delivery deals with utilities, that worked through a lot of that oversupply. Okay, and then you also had the likes of Cameco shutting down MacArthur and then buying in the market, shutting down Rabbit Lake, buying in the market, Paladin shutting down Langer Heinrich. You had Kazakhstan produce at the lower end of their subsoil use agreements. So you've had all of these elements come into play. Then we have the COVID situation with Cigar Lake coming down for 6 months, and then again for another 3 months, with Kazatomprom not drilling well fields for 6 months. All of this has had an effect on working through that oversupply. That is why you see utilities for the most part covered in the short term. You have the US utilities covered for around 2 years, Europe 3+ years. Okay, and so all of that material has mostly been worked through, and now we're at this point where we're hearing that deliveries are now stretching out a few months in the spot market. You're not going to go into the spot market and demand 4-week delivery for any reasonable amount of uranium. So that's the slow part. Okay, slower than all at once. What's adding to the slowly part is also the unwind of the carry trade to a large extent. So I've talked about this in the past. I'm not going to go deep into it, but that reverse carry trade concept, where you have even a slightly backwardated market where the future prices are lower than the current spot price. Now, that's not the case at this present moment. The market is mostly flat right now in terms of the term price and the spot price. It's right. They're both right around $43 a pound. So when the market is slightly backwardated and a carry trader is holding pounds for a future delivery commitment, they can sell those pounds in the spot market, book some profits, and book a midterm delivery for themselves to cover those pounds that they are obligated to deliver at a lower price than they just sold in the spot market. Now that has been happening on and off since spot's been on the scene, and that will continue to happen. So to the extent that we see higher volume buying in the spot market from end users like spot, or possibly other traders, or possibly other hedge funds, or potentially even utilities, we're going to see some more unwind of this carry trade. Now, what does that mean? More liquidity into the spot market for the short term. Now, slowly than all at once, we are going to need to work through some of that. Either that or the midterm price moves up in line with the spot price. That's also a possibility. The midterm sellers, this is not an endless pool of uranium. This is pounds that will be produced in the next 2, 3, 4 years. And we only have so much supply coming online yearly from sellers that are willing to sell into the midterm market, okay? So eventually we will work through that. In my opinion, we will work through the carry trade pounds faster than we'll work through the available midterm supply. That's my own opinion. I could be wrong. That's what I'm seeing out there. So what does that mean? We're going to need sufficient volume into the spot market to work through that carry trade unwind. And at that point is when we should expect potentially explosive moves in the spot market. Now, when does that point happen? That's tricky. That's a hard question to answer. Nobody can answer that question, but it's closer. It's something that we can likely measure in months rather than years. Let's just say that. Slowly than all at once. I've discussed a metaphor in the past where there's a rope coiled up on a pier, and that rope is tied to a ship, and that ship is Sput, okay? Now, Sput is slowly motoring out to the ocean with the rope still tied to the dock. How long is that rope? We don't really know. We have an idea. I'm not going to talk about it here. I've mentioned it to members, and we will continue to track this, but we relatively know the length of that rope, okay? Sput is going out to the ocean. At some point, that rope will become taut, and it's going to yank that pier into the water. And what is fueling Sput? How fast and how far will Sput go? That's financial capital, okay? That's the fuel. Now, that financial capital, you have to ask yourself, do you think there's substantial capital currently on the sidelines, for whatever reason, aware of the uranium investment thesis? Do you think that Sprott will be able to successfully market URNM and Sput to their clientele with sufficient financial capital to do what we think is coming for the uranium market? Those are the questions you have to ask yourself, okay? So going back to the mailbag addressment of sentiment, sentiment is what moves markets until fundamentals do. So right now we're at pretty low sentiment still. It's perking up a little bit just based on the fact that stocks are not falling day over day, which is a good thing to see. There's still, like I mentioned, broad market jitters out there, and I think that's justified. Could we see another flush down the broad market? Absolutely. Are we about to enter a multi-year painful bear market in the broad market? No, I don't think so. I think that the broad market's going to have its influence on uranium, especially when the spot market is not moving. Would that change? Would we see a rotation? I think we very, very likely could see a rotation. That classic growth to value rotation everyone's been talking about. Oil and gas and other energy sectors have been outperforming uranium, at least in the near term, in the recent near term. But when uranium starts to move, we are going to see a rotation out of a number of sectors into uranium. And I believe personally that there is sufficient and substantial financial capital on the sidelines that is going to enter this trade at some point. And I think that point is closer than it is far away. All right, so I'm going to leave you guys with that for the weekend. Thank you again for tuning in. And I don't say this enough, but I do appreciate all of you. I'm very, very grateful for the position that I'm in, writing this newsletter, doing this podcast. I'm working on getting the podcast up on audio channels, Spotify and Apple Podcasts. That will be coming shortly. I know that I've had a lot of requests for that, as if you don't have YouTube Premium, you have to have the video up and running to hear the audio. And sometimes you just want to have your phone in the pocket, not have to have the screen on, and just be able to listen to the content in the background. So that's coming. Thank you so much for following this channel, liking. I do appreciate it. Share it around. We need to share this thesis because I haven't been more confident ever in 5 years of following this market of where this market is going. And so that's where I'm at in terms of short-term versus long-term. I hope that you all are doing well. Hope that you have a wonderful weekend, and we will see you on Monday. Cheers.